The ASX 200 is set to trade down. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from the ABC, which is discussing, well, the prospect of the ASX 200 trading down today. So, the ASX 200 is set to trade down as 2021 brings more COVID woes to Australia and the US. Now, for those of you that aren't aware, the ASX 200 is an index of 200 companies in Australia, pretty much the top 200 ones that are listed on the stock exchange. And if we jump over here to trading economics, we can see that, we were at an all-time high back in Back in Feb, over 7,000. And then it just tanked. It really tanked to 4,600. And we've been steadily climbing back up through most of 2020 to try and get back to that high. So we're at 6,600 right now is the time I'm recording this. And let's go to 10 years out. And you can see here, there you go. This is June 2019 when it hit. That was an all-time high. And of course, it just kept going higher, We'll go all-time. Nope, sorry, it wasn't all-time high. Back in 2008 in the GFC. So we're right back to where we were there. We didn't quite get over 7,000 there. We didn't reach it back then. And of course that crashed and steadily has taken years to climb right back up again to there. And then we crashed again, and look how fast we've grown again. So the question is what we're seeing here a dead cat bounce, or an accurate reflection of the market, or is it because we're seeing, in some ways, the candle-on effect? It refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point, and therefore a specific flow path through the economy. Now, we could argue, perhaps, with crypto. Is that what we're seeing here, the candle-on effect materialize in some regards, combined with a loss of consumer and retail confidence, and now some institution and large money confidence in the rampant money printing that's happening at the Fed in the States? Well, we'll have to see, everyone, what's going to happen today. So let's jump back and have a look at this article and see what they're saying. The Australian share market is set to come off its new year high as the nation and the US grapples with what 2021 could really bring. Here's the thing. A lot of people are thinking, fantastic, it's the new year, and all of a sudden, everything's going to be perfect and fine, like magic fairy dust. That's not quite how it works. As of 6:30 Australian Eastern Time, futures in the benchmark ASX 200 were trading 0.4% down to 6,586 points. The local currency is down 0.5% to 76.66 US cents. There you go. We're hitting it. We were at 77 cents. And if we jump over here, the Australian dollar, we crashed earlier this year. There you go, around 57 cents, everyone. So it's been doing pretty well. Is it going to head back down? That's one for all you Forex guys in the comments. Despite the resurgence of COVID-19 in Australia's two biggest cities, Melbourne and Sydney, the AX finished its first day of trading for 2021 yesterday on a positive note, enjoying its best day of trade since November 24. Well, if we have more government stimulus and intervention in the market due to this illness, that's why the US market was going gangbusters. Because of the Fed. The Fed just essentially quantitative easing. And it's a trap. They'll never be able to get out of it now. Commodity and gold stocks were the best performers. But the market now looks to come off that high. This comes as US markets are also trading down on their first session of the new year. The Dow touched a record high earlier in the session, along with the S&P 500, but was dragged down by more than 4% fall in shares in the aeroplane maker Boeing, after Bernstein cut its rating to underperform. That comes after issues with its plane, the MAX 787, which the ratings agency said could significantly hurt its cash flow. All three major indexes dropped to two-week lows from record highs, fueled by monetary stimulus and the start of vaccine rollouts. The fate of the U.S. President-elect Joe Biden's agenda, meanwhile, including rewriting the tax code, boosting stimulus and infrastructure spending, hinges firmly on Tuesday's twin Senate races in the battleground state of Georgia that will determine control of the chamber. Investors are feeling a bit nervous on the first trading day of the new year, and I think this is a confluence of factors, Lindsay Bell, chief investment strategist at Ally Invest, said. She cited the rise of COVID-19 cases and the new virus variant that has spread around the world and the Georgia Senate race. Total U.S. deaths from COVID-19 have now topped 350,000. Investors are at a point where they want to take breather while they assess all the different things coming at them in the new year. On the data front, U.S. manufacturing activity picked up at its briskest pace in more than 6 years in December, a survey showed in March. Some investors are cautious about the pace of economic growth in U.S. jobless claims remain stubbornly high, while a new round of pandemic-related restrictions last month and a new variant of coronaviruses has cast a shadow on the outlook. On the plus side, Tesla's shares extended a meteoric rally to scale a record high after the electric car maker reported better than expected vehicle deliveries in 2020. So European stocks trade higher. Meanwhile, European shares rallied in the first trading session of the year as a landmark Brexit trade deal and coronavirus vaccination campaigns across the continent bolstered expectations of a strong economic rebound. The pan-regional stock 600 gained 0.7% to touch fresh February 2020 highs. German-listed shares in the world's biggest holiday company, TUI, rose 2.7% after its chief executive told a newspaper that he expects a largely normal summer this year. Germany's DAX was up marginally 0.1% after a long weekend to trade below all-time highs, while France's CAC 40 added 0.7%. Britain began vaccinating its population with the COVID-19 shot developed by Oxford University and the AstraZeneca on Monday. London's blue chip FTSE gained 1.7% in its first day of trading, with Britain outside the European Union's orbit. While the hard-fought trade Brexit deal agreed late December set rules for industries such as fishing and agriculture, it did not cover Britain's much larger finance sector, meaning automatic access to the EU's financial markets came to an end on December 31. So, there we have it, everyone. Arguments that the ASX 200 is set to trade down today due to COVID woes in Australia and the US. And if we jump and have a look, we can see, we can have a look at the index, ASX 200. And we'll have to keep an eye on that today. Has it opened yet? I don't think it has. Or maybe it just has. Let me check the time in Sydney. And if we look at the commodities, I mean, gold and silver have finally made a big move. You can have a look there. Look at gold shooting up to 1944, silver up to 27.25, and Bitcoin, it's taken a breather and maybe consolidating some of its insane gains. You can see Ethereum at $1,030. This annoys me when Ethereum gets expensive because I move around tokens. You know, I earn a little bit of token on my library channel. I get some tokens from Brave, people who support the channel there. So I move them around and consolidate them. And then I'm always paying higher Ethereum fees. It's frustrating. That's my biggest issue with a lot of the cryptos, is just for day-to-day use, for moving stuff around and making little purchases. It's worse than a credit card. You pay a transaction fee here, 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 here. It adds up. Then you've got good old XRP, still suffering from the SEC case against Ripple, and we'll have to see how that goes. So there we have it, everyone. Thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. Are you investing in the ASX 200 now? Are you investing in shares, or are you waiting on the sidelines? Or are you just doing dollar cost averaging and just, slowly chucking something in, regardless of where the market goes? As always, everyone, let me know your thoughts and opinions. Like, share, subscribe to the channel. If you want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. Support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I'll see you next time. Bye for now.